Hello, and welcome to Financial Fluence, where we'll teach you the most up-to-date strategies and tricks for making money online. Don't forget to subscribe to the channel, hit the like button, and turn on the notification bell to be notified every time a new video is uploaded. Also, don't forget to leave a comment down below. Michael Burry discovered that the figures in the mortgage industry didn't line up in 2004 and 2005. Because these mortgages were issued to those who had a significant probability of default, the subprime market was inflated. That logically indicates that the real estate market will burst sooner or later, and that the housing bubble will eventually lead to the collapse of the US economy. Burry worked as a manager at Scion Capital, a hedge fund he created just a few years ago. So in 2007, he decided to short the market and bet against subprime mortgages. And guess what? He made almost $100 million when the market crashed. To the majority of people, crises are bad. You lose your job, you may lose your clients, and you wish for things to return to normal. But to the wealthy and those who understand how the system works, a crisis is a blessing that comes once every 10 years and allows you to make more money in a single year than you would in 10. In this video, we'll look at 3 ways that the wealthy profit during economic downturns. Number 1. Shorting. The majority of people are aware of 1 or 2 techniques to profit from the stock market: buying low and selling high. There's nothing wrong with that, but if you delve a little deeper into the stock market, you'll discover that there are numerous other ways to make money, particularly during times of crisis. Shorting is one of the most popular methods, and Michael Burry used it. Let's pretend Apple stock is worth $100, and you expect it to decline to $60 next month for any reason. Here's how you make money. You borrow $100 worth of Apple stock from your broker and sell it. You've made $100, so congratulations. Now let's imagine your prediction is correct and the stock price drops to $60 after a month. You buy Apple stock for $60 with that $100 and return it to your broker, whom you borrowed it from a month ago. Suddenly, you've made a $40 profit without spending a single penny of your own money. You profited from the stock's depreciation. On paper, it appears to be a brilliant idea, but it's incredibly hazardous, since if you make the wrong bet and the price rises instead, your losses may theoretically be limitless. Nonetheless, it's an incredible instrument for making a fortune during times of crisis. Let's imagine you were reading the news in February and understood that this virus was on its way to the United States, and that the country would have to go into lockdown. Because we are already on the verge of a financial crisis, and if that happens, the stock market will crash. So you chose to short the market at its top, and the market crashed a month later in March, making you a fortune. Is that something that someone did? Yes, Bill Ackman, a hedge fund manager who was recently involved in Wall Street turmoil, did it. In a shareholder letter to Pershing Square Capital Management Fund investors, Ackman revealed that he profited by $2.6 billion when the markets plummeted. According to Bloomberg, short sellers profited over $50 billion in the fall. When the dot-com bubble burst in 2001, the S&P 500 index dropped 11.88%. Scion, Michael Burry's hedge fund, was up 55%. At the pinnacle of the internet bubble, Burry was able to earn these profits by shorting expensive tech equities. The S&P 500 lost 22.1% the following year, whereas Scion was up 16%. The stock market finally recovered the next year, rising 28.69%, but Mike Burry outperformed it by 50% on his investments. The good news is that the market will most likely crash again this year, especially as the pandemic's second wave approaches. Number 2. The Federal Reserve's magic. The Federal Reserve's responsibility, in addition to overseeing the Fed, is to keep the economy from entering a recession. It does so in a variety of ways, one of which is through lowering or raising interest rates. During a crisis or recession, the Federal Reserve or any central bank lowers interest rates to the bare minimum, even to 0% or even -%, where banks would pay you to borrow money. That sounds wonderful, doesn't it? Some of you may think I'm crazy. People, on the other hand, are afraid to spend, invest, or hold on to their money while the economy is in turmoil. Negative interest rates are a strategy to entice people to spend in order to re-energize the economy. Here's a great technique to increase your wealth by doubling or tripling it. Take advantage of these no-interest loans to buy your competitors while they're on the verge of bankruptcy and gain market dominance. When the epidemic is over, you'll have a significantly higher market share and be able to swiftly repay that debt, especially because it was a no-interest loan. Some people even use these no-interest loans to invest extensively in the stock market while prices are low. Sell your portfolio and pay off your debt once the market rises. It may appear unethical, yet competition is the lifeblood of the economic world. You can either fight to hold your ground or get knocked out by a competitor or a new business that has come up with a better approach to serving your clients. However, because most impoverished people do not grasp how the economic system works, they will not be able to take advantage of these negative interest rates. If you've just lost your job due to the pandemic, the last thing you'd want to do is take out another loan you're not sure you'll be able to repay. Number 3. Look for an emerging trend. Many businesses failed in 2008, and millions of people lost their jobs. And because it was a mortgage crisis, many people lost their homes, while others found ways to benefit from it. The CEOs of the corporations that went bankrupt left bonuses worth hundreds of millions of dollars to the companies. People at the bottom understand the value of investing and having additional sources of income in addition to their work. However, in the complex world of the stock market, it appears that the average person is more likely to lose money than win money. Furthermore, brokers were not inexpensive. You had to pay your broker $5, $10, or $15 to arrange a deal and buy some stocks. Of course, if you're making tens of thousands of dollars, this isn't a big problem. It's par for the course for you. However, for beginners who are just getting started with a few $100s, $10 per trade is a lot, as Vladimir Tenev and Baiju Bhatt discovered. They created Robinhood as a result of the events of 2008. They founded Robinhood in 2013 and stated that it would be a commission-free trading platform, where anyone with a smartphone could start investing as little as a few dollars. It was a watershed moment in history. It inspired a new generation of investors, encouraging people who had never considered investing in the stock market to do so. Year after year, the number of users on Robinhood continues to rise to new heights. It was valued at $5.6 billion in its most recent round of funding. It's most likely much higher now. Within a few years, its founders had become billionaires. Crises present new obstacles, forcing us to come up with fresh, unique, and imaginative solutions. These ideas have the potential to grow into multi-billion-dollar businesses. And wealthy people recognize this, which is why they are focused on one of two things: either solving these problems themselves, or finding someone else who is already solving them and investing in them. Because a small investment made during a crisis can turn into a fortune after the crisis has passed. Because of the pandemic, corporations were pushed to develop new vaccines. In just 42 days, we developed and tested a vaccine, which has never been done before. Just consider the implications of the pharmaceutical business. Other companies are experimenting with different methods to allow their staff to work from home. Consider how much this means to millions of individuals all across the world. Others are strengthening their delivery infrastructure so that food and goods will be delivered faster and better even after the pandemic. As with earlier catastrophes, we will have to wait a few years to see the full effects of this pandemic. I hope you guys have enjoyed this video. And if you enjoy similar stuff, check out my other videos. And if you like them, hit the like button, subscribe to the channel, and turn on the notification bell. If you have any questions, feel free to leave a comment down below, and I'll see you in the next video.